This video is going to be all about what I have learnt and focused on the first 6 months of this year to make myself a better trader in my eyes and become more in line with, further in line with how I want to trade for the future. I always feel that everyone's trading journey is slightly different. But the thing is, it's a journey. You've got people that are maybe more shiny object syndrome. They go from course to course. They're at that stage, which I've been. You have people that cling on to buzzwords because that's what they feel is best for them, and then those buzzwords die down. I mean, since the time that I've been trading, like seriously, for around 2 years, but then before that, I've been doing it for a while, years, and every year, even every 6 months, there's always buzzwords. There's always some kind of topic that gets people's attention for that period of time. So right now it's this whole bank words, Wyckoff, over complicating things, um, to give yourself a reason of why something hasn't worked out. Now, I don't have anything wrong with people trying different things and looking at different things, seeing what's going on. But at the end of the day, it's just about what works for you. You don't want to slander anyone else, and you've just got to accept what the market's giving you, and you look to trade from your rules, from your system. So for me, my system's 1 to 3 trades a day, and I'm more than happy with that. It allows me to do my thing, and then I can go on with the rest of my day or whatever. Now, the main kind of trades that I take reversals, I take continuations in terms of 15-minute, 1 hour break and retests in momentum, and fast momentum trades. So, something that has really helped me with getting better at trading in the last 6 months and at the start of this year has been focusing on trending pairs to trade as they're more likely to break multiple lower time frame structures. So what I mean by this is, if you look at strong trending days, like for example, Aussie Swiss just now to the upside is the biggest mover on my overall currency watch list at 0.41% from the open right now. So that's the most. This is Aussie Swiss right now is the best trending to the upside since the start of the day. Now, how many 15-minute break of structure has occurred since then? Well, to me, we have one, we have two, we have three, and then we have four. A miniature one, but it's still that. So, I mean, we do have ones to the downside, like here we had a breakout, break back in type scenario. But to the upside, in a strong trending day on the 15-minute, you've got one, two, three, four, maybe a fifth later on today, who knows. But that shows you that you are more likely to get 15-minute breaks of structure, etc., whenever price is strongly trending. The thing that allows a lot of people to get into the whole bank side of things is they are essentially looking for very deep pullbacks to areas that make sense on the 1 hour or the 4 hour. You always hear about people saying, "Oh, I just trade from 4 hour levels," or stuff like that, and that is because if you focus on only a few pairs, they can't trend every day. So you've got, like, if you're looking for a trade every day from the same rough pairs, whether it's pound yen, which is one that a lot of people focus on, pound dollar, whatever. Obviously, the buy low and the sell high on days that are not trending is different to days that are trending, because the days that are trending, price doesn't pull back far enough to your higher time frame buy low, sell high areas, because it doesn't need to in order to keep moving. And whenever maybe 2 years ago, whenever I was first becoming consistent, I became consistent from focusing on less pairs and looking for a trade every day in a different types of trades. Now, I I think that is not the way to go in terms of long term sustainability, because you're just forcing the market a bit too much. Now, I'm also not saying that you have to trade the way that I do in terms of looking across the whole market once, twice, three times a day and doing that. But I would always suggest to have three, four, five pairs, whatever you're comfortable with, that you're not getting bogged down. You're not looking at the lower time frames too much. You're not getting interested in pairs that aren't trending. Basically, wait until they're trending. For me, that means, like, for example, Aussie Swiss. If I'm looking for further longs, like a fast momentum trade, I want to see how price does at these highs. If the momentum still continues, then I can take a trade, like something like here. We had a high, price then takes out the high, closes beyond, can't close back within the range, and then continues on higher. Obviously, there's all covered in the course, etc. But that is essentially what I want to do. If I feel that I can't get a reversal trade, I know we are in a 4 hour area, but if the momentum continues, I can get in and out before, like, a potential reversal occurs, because it's a higher time frame area, and I only need to aim for 1 to 1.5, 1 to 2 type trade, and then be done. So another point is the being strict with my stop loss and management points depending on the type of trade that I'm taking. Again, this is all covered in the course. I have made a real effort to make sure that my stop loss and management points are as mechanical as possible. Like, there's no ifs, buts, maybes. It's like, well, if I'm taking this kind of trade, I need this stop loss placement to make it worthwhile, and these are my management points. And that's it. There's no kind of second guessing. It's just, that's the way that it is. If it doesn't make sense, then I've got to wait until it does make sense. Another point is that I've unfollowed 99% of the traders, trading pages on social media, and that has been a really, really good thing. Now, with what I do, I don't have a community, because I've been in communities in the past. I've bought courses in the past that have had communities. Whenever I first started, Telegram groups or WhatsApp groups, whatever. And I feel that once you become consistent and once you become good at your craft, the last thing that you need to be doing is being affected by others' opinions on a trade. Now, it's all right to go and look and kind of talk to other people, or after your trading day, discuss it with people that know how you trade, to make sure that they're seeing the same things, or like, to have someone to bounce off ideas from. But to rely on another person's forecast before you actually look at your own is just a recipe for disaster, because you're just going to use them as a crutch rather than learn for yourself, but finding what works for you and then just honing in on it, rather than just looking at everyone here, there, everywhere. Especially, you've got all this flashy stuff on social media right now that it's just smoke and mirrors. It's not going to help you get better at trading if you're looking at someone buying a new car, or if you're looking at someone like a day in the life or whatever. No, the way that you're going to get better is by learning the right stuff, learning how to read the market, knowing your higher time frame zones, the 1 hour, 4 hour, daily, knowing how to spot a trend, how to spot momentum, all this kind of thing. Like that can never be taken away from you once you learn it. It's like I'm learning Spanish right now, and what like once you have that foundation, all you're doing is adding to your verbs and your vocabulary. It's the same with trading. Like once you have that solid foundation, it's just about taking trades, learning from your own trades, and then asking someone that knows the way that you're trading. Like for me, my students send me homework or send me trades or send me trading view videos of recent trades they've taken or screenshots or whatever, whether it's a win, a loss, a partial win, whatever. And I'll then break it down from how I'm seeing things, but I'll also keep an open mind to be like, well, it might not be a trade that I take, but I can see why you've taken it and you've managed it properly, you've put your stop loss in the right area. That's all good. I don't try and make everyone cookie cutter in the way that you're going to learn how I see the charts and my knowledge, and you're just going to trade the way that I trade, and that's not correct, because I understand that some people see reversals better, or some people see higher time frame continuations better, or whatever. Like as long as you're giving yourself options, that's fine. Another one is not expecting every trade to be a home run. So what I mean by that is, again, it goes back to my management points. Whenever I'm in a trade, I have management points depending on the type of trade that I'm taking. That's all covered in the course that you can basically adopt and take to your own strategies. I firmly believe it is one of the best things that I've done for my own trading is just not so focused so much on the entry, but just on those kind of parts that you can be in control of, that you can just say, right, well, this is how I do this. And there's no if, buts, or maybes. Yes, I do test things, but that's out with my actual trading. It's not my main trading. And it allows me to then see if something else makes more sense. But a lot of people, they use structure for analyzing, they use structure for forecasting, but then they don't use structure whenever they're in a trade. They're just blindly saying, right, I'm looking for a 1 to 2 risk reward, I'm looking for a 1 to 3 risk reward. Well, that can hinder your performance, because if you weren't in a trade and you saw a certain kind of area that has been structured in the past, you would expect a reaction. Now, just because you are now in a trade, you're just like, well, I'm aiming for a 1 to 3. That's it. Well, that's not good for your trading in the long run. You need to be more aware of how you look at the chart whenever you're not in a trade compared to how you look at the chart when you're in a trade. And yeah, just not expecting every single trade to be a trade that gets to your second, third management point every time. Sometimes it's just going to get to that first management point and then it's going to turn around from there, because it's an area of structure that's going to be respected and you just have to take what the market gives you. And last but not least is not forcing a trade straight away when I look at the charts. So letting trades come to me, that's something as well. So no matter what time I wake up in the morning, the first, like this is all in the course as well, in terms of like my daily schedule, what I do. The first thing that I do is I go through my whole market. Like obviously I've looked the night before, I've got the kind of idea of what I'm looking for in terms of like trending markets, what I think can happen. But then what I'm doing in the morning is is I'm looking through my whole list. I'm looking through my whole list, and I'm like, right, well, this is trending, this is trending, this is in an area that can possibly be a nice reversal area, this is ranging, there's no momentum in this. And it's just a quick 5-10 minute look through the whole market, seeing what's strong in terms of currency. So right now, obviously, Aussie's strong, New Zealand's strong. Um, yeah, you can see that the euro and pound are currently weak, but there's not too much sell side right now. It's more to the upside. But yeah, just like getting that whole picture. And then I do that just before kind of New York session starts as well. So looking at it from a perspective of an American waking up, or a person in that time zone waking up, and then seeing the charts like fresh, just as how I look at the Asia session, to then be like, well, this is what's happened in the last few hours. I then have to be like, well, what's happened in the last few hours in terms of the London session? Is there any areas that I should be aware of? So that takes no more than 15 minutes, 10 minutes. Obviously, the more that you do it, the quicker that you'll get. I'm very proficient now. I've been doing it for years. Obviously, slightly changed the schedule over time, but now I'm very, very comfortable with how I do it. And it's just a case of, right, this is trending, this isn't, this has got momentum, this isn't, this is ranging, this isn't. And it just very quickly, the stricter you are with the filters as well, the better, especially for myself whenever I'm looking at the whole market. I don't like, I only need three, four kind of pairs that I'm really interested to trade. So, like today, I was looking at Euro Yen shorts, Aussie CAD longs, because they were trending. And Aussie CAD is 0.3% away from the open now, and Euro Yen had a stronger run to the downside, but now it's obviously gained a bit. But you can see that it's the price has done its move. You've seen that it had a push in Asia session, went sideways, made a new low of the day 526, pulled back, created some sellers, new resistance, and then has had a nice push since then. We're now coming into an area that obviously is 4 hour structure support. It's also the low, like close to the lows of Friday. It's at the structure that created the lows, so I expect some kind of reaction from here. But I'm not really interested in getting long from here, because this candle's probably going to close bearish. It's just, there's no real momentum in the market in that kind of side of things. It's just not a kind of trade that I would take. But yeah, that's what I kind of saw that has allowed me to improve my trading further, is by just those different points and just not forcing a trade straight away, setting my alerts, having an idea across the whole market. For example, like pound dollar, euro dollar. There's nothing that's really happened today from them. They're in kind of no man's land. They've just been going sideways for 3-4 hours. Nice push in Asia session, and then it's dried up. It's dried up. The momentum and volume has dried up. Now, if this area holds, then it could make sense that we continue on short, but then obviously that would mean that the dollar would get stronger, because we've had a strong push down and then we've held for a few hours. If this area can hold on the lower time frames, 15 minute, or do a kind of break back in scenario, so something like this, in, pull back into the resistance that has been created here, and then first target low of the day, and then obviously second target the low of Friday yesterday, and then third target being the 1.41 flat area. Obviously, if it's to go to the upside as well, then that'll be a different scenario. But the whole point that I'm trying to say is that there will be people that are trading this right now, and they could have got some pips, of course, like this kind of area here from kind of 8:30, 9 in the morning, but it was very strong bullish into the 15-minute break and retest area, and then very strong bearish. It's very like up and down. There's no real strong momentum, real strong trend. It just sometimes pairs need time, and if you're focusing on fewer pairs, you've got to understand that you will get sucked in more often than if you were looking across more pairs into trades that you almost know that you shouldn't be getting into, that you know you should be giving the market more time, but you just want to be in a trade. And that isn't from a lack of knowledge, as long as you know that, of course, but it's not from a lack of knowledge, it's just that human aspect that you just want to be in a trade. You just have that kind of urge. And I always suggest to, if you have that, write it down and then try and get better at just avoiding the market whenever you don't need to be involved. You don't need to be involved in a trade every single minute of the day. So pick your battles wisely with the market.